first spouse dies. Surviving spouse says, hey, I still want the same level of income, basically. I still have the same expenses. But their tax bill goes from $21,000 to, in this case, $34,000.
Oh, my gosh.
Like a 50+% increase.
Mm-hmm.
And the same income. Why? Because we're a single taxpayer.
Right.
Not a married taxpayer. Here's the question. Has anybody told them about that before they came to see us?
Probably not.
No, nobody tells them this stuff.
Welcome back to Retirement Today. I'm your co-host, Zach Holcomb, and alongside me we have Michael Reese. He's a certified financial planner and founder and president of Centennial Advisors. On today's program, we're talking all about the 3 key steps you need to take to have complete financial security. Right, Mike?
Yeah, that's it. And I know we talked a little bit about this blueprint we've developed here at the end of the last segment.
Right.
Heads up, this is a personalized one-page blueprint. It's customized for you and your unique situation. The goal of this is to give you an easy path so you can ensure that you have complete financial security. Not partial, complete. So we just got done talking about things like asymmetrical investing versus symmetrical investing, right? And it's really nothing more than saying, hey, if you average an 8% rate of return, say, hey, are you risking 25% of your money to get that 8%? Or are you risking maybe 5% of your money to get that 8%, right? That's really what it is. And, given the option, obviously, it's a no-brainer. I'd rather risk a smaller amount of my money to get the same return, right?
Yep.
So step 1 is let's find out where you are from your investment, your money management side of things. Are you making great choices there? Or is your advisor making great choices? Now would be a wonderful time with markets at all-time highs to figure that out, right? All right, let's move on to the second thing. And, this is the one near and dear to my heart.
Your favorite topic.
Taxes.
Yep.
Taxes, taxes, taxes. This is just like the Brady Bunch, episode where it's Marcia.
Taxes, taxes, taxes. And Mike.
Mike is like, taxes, 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 right?
Yes.
So here's the thing. As time goes on, the IRS, they're just going to want a larger slice of your savings.
Right.
Most people, if you're like most people, the majority of your money is probably in your 401k.
Right. It's what we're told to do.
Yeah. 401ks, 403bs, 457s. That's where the money is. The problem is that money's never been taxed. And at some point down the road, the IRS is going to say to you, hey, you got to pull the money out, and we're going to take a chunk of it every time you do.
Right.
But it's worse than that because they don't just take a chunk of that money. Many times when you take distributions from your 401k or your IRA, especially if you're in retirement, suddenly, not only do you pay tax on that money, you pay more tax on your Social Security, right? Before you took the money out, your Social Security, maybe it was tax-free. Maybe you paid a small amount of tax. But suddenly, I took an IRA distribution or a 401k distribution. Suddenly, I'm paying tax on almost all my Social Security. That's called double taxation, right? Your capital gains. You might be in a tax bracket where you pay little to no tax on capital gains. Suddenly, pulled some money out of my 401k. Suddenly, I'm paying tax on my capital gains. Now we're at triple taxation, right? And it goes on and on. And what are they talking about in Washington, D.C.? They want to do what? Increase the amount of taxes that they charge you. Guess what? If you look at usdebtclock.org, you're going to learn that this is not a one-time thing.
Right. I'm shocked to hear all of this.
Yeah, taxes are going up. What's kind of interesting is, we talk about how bad taxes are today. Mm-hmm. If you look historically, we are kind of near all-time lows. Like the top tax brackets right now are what, 37 to 40%? Historically, there was a 50-year period of time where they were over 50.
Wow.
Top tax brackets were 70%. They were, after World War II, it was 94.
That's
it's just crazy, right? So here's the thing. Taxes, you're living in a cave if you don't think tax rates are going to increase. It's going to happen. The question is, to what are you just going to be like an ostrich? Are you going to sit there and bury your head in the sand and ignore it?
Yeah, and say, all right, I got to take it.
Yeah, it is what it is.
Sure.
Or are you actually going to pay attention and plan for it? So I'm going to give you a real world example of that,
Okay.
right? Couple comes in, they have, and I'm going to just round these numbers off, okay? Call it $1 million in their 401k. Again, you might have more than that. You might have less. Doesn't matter. I'm just using this example to give, because it's a round number and it's easy to work off of. They got $1 million in their 401k. They've got some Social Security. They want to live on $7,000 a month. That's their deal. They want $7,000 a month to live on. They want it to grow with inflation.
Mm-hmm.
And we did the math for them and like, hey, check it out. You guys are in great shape. But let's talk a little bit about the tax road you're on. And we learned that their first year of retirement, $84,000 of spendable income that they want, $7,000 a month times 12 is $84,000. Say, hey, we want to live on $7,000 a month. Their tax bill on that, Zach, it was like $6,000.
Yeah.
And if you think about it, $84K that you're living on, that $6,000 tax, you have to pull out $90 to live on, pay $6 to the IRS, live on $84. That's a pretty low tax bracket.
That's not too bad.
Not a big deal.
Yeah.
Right? But as they age, inflation creeps up their income. They hit age 72, 401k is required distributions.
Mm-hmm.
Their taxes go up every little year, a little bit.
It's kind of creeping up on them.
Yeah, they creep up. By the time they're in their 70s, early 70s, now it's like $11,000 a year on the same income. By the time they're in their mid-80s, $21,000 a year on the same income. Gone from $6,000 to $21,000. That's more than triple.
Right.
Why? Well, required distributions. They're being forced to pull more money out of their 401k than they're spending.
Mm-hmm.
So they just have to reinvest it, I guess.
Right.
But then here's the real kick in the pants. Husband dies, because we're never going to say the wife dies first. That would be.
We always got to attack the men.
Never pick on the wife. Always pick on the husband.
Right.
Right? First spouse dies. By the way, it doesn't matter who dies first. First spouse dies. Surviving spouse says, hey, I still want the same level of income, basically. I still have the same expenses. But their tax bill goes from $21,000 to, in this case, $34,000.
Oh, my gosh.
Like a 50+% increase.
Mm-hmm.
And the same income. Why? Because we're a single taxpayer.
Right.
Not a married taxpayer. Here's the question. Has anybody told them about that before they came to see us?
Probably not.
No, nobody tells them this stuff. And if you don't know, I mean, you're just head buried in the sand. You don't know. How do you know if you have a problem?
Then you're not doing anything about it.
Now, with planning, what if we said, well, what if we did some Roth conversions or something? Let's put together a Roth conversion schedule over the next 7 years. Right? Or 5 to 7 years. Let's convert some of that IRA to Roth or that 401k to Roth. And if you do it the right way, now when they're in their 80s, instead of having a $21,000 tax bill, it's like $2,000.
Yep.
Instead of the surviving spouse paying $34,000 in tax, they're paying $3,400. I mean, like 90% tax reduction later in life, all by paying a little bit of tax up front.
Right.
And over time, in this particular case, it saved that couple over $188,000. That's right, almost $200,000. $188,000 of tax saved over their lifetime.
It's a life-changing amount.
That's $188,000 that they were able to keep in their pocket and not give to the IRS.
Love that.
Question. They spent like a total of 2 hours with us over, a couple of meetings. Do you think that was worth their time?
Yeah, absolutely.
I mean, duh. Okay, what about you? Let me ask you this question. What about you? Do you know what your future tax liability is going to look like? If you want complete financial security, Part of that means that you not only you know what your future looks like from a tax perspective, but you're also actively engaging in tax planning each and every year. Not, I do it this year and I'm done. Each and every year to make sure you're giving the IRS the least amount of money over time. It's not just what you paid this year, it's what you're paying in the future as well. Are you doing that? Do you know, if you're married, what your surviving spouse's tax bill would be if you passed away? I mean, Zach, I'll bet you 95+% of people have no clue.
I'd agree with that.
They have no clue because nobody talks about it. But it's important. It's very important. If you could save $150,000, $200,000, $300,000 of tax, heck, if you could save $50,000 of tax over time, wouldn't you want to know how to do it?
Yep.
And that's why we want to make it easy on you, though, right? We want it to be easy. So that's why, again, first 10 callers, we will provide for you, free of charge, a personalized, one-page, complete financial security blueprint. Folks, this is easy. One simple page, we're able to drill it down and say, look, these are the key areas you need to look at. And what it does is we personalize it to you. We have to get some information from you, of course, but we personalize it to you so we can tell you, here's where you are, here's what's possible. How are you doing in each of these three areas? How are you doing with your money management, your taxes, and your protection planning, which we'll talk about later. This is free. It's easy, and it's simple. Why would you not want to take advantage of this, Zach? What do they need to do?
You just have to give us a call at 512-886-5850. Again, that's 512-886-5850 to get this free financial blueprint. Hi, and thanks for checking out Retirement Today. If you like the content we share on our channel, make sure to like, comment, and subscribe so you can stay notified about all of our latest content and videos. Be sure to share all of our information with your friends and family as well. Thanks for joining us. We'll see you next time.